Happy Monday. Actually, I mean that. Happy Monday. Ramon, welcome. How are we doing? We feeling good on Monday? Yes, Kevin, thank you. Thank you. Look at this craziness. Look at this craziness. QQQ. What do you guys think? Are we going to have a rejection of a breakdown? A rejected breakdown? So if we do, it means we're going to whip back up real quick. That's what happens when breakdowns get rejected. Do you think we're going to set ourselves on a little downward trend here? This is QQQ. Give me a 1 for a rejection and a spike up. Give me a 2 for a continued downward trend. Also give me a shout out if you know which technical indicator I'm using. The main squiggly one here. I'm actually using 2. If you can call out 2. Producer AB will give you a compliment. What's up, Voodoo? That's right. That is right. Bollinger Band. Bollinger Band. I'm on the daily. The VWAP is the VWAP. If I had it on right now, which I'll turn it on, and it's with its default settings, it's just going to kind of follow these candles. Really got to zoom in. VWAP is more of a high frequency tool, not strictly speaking, but for shorter time frames anyway. Which, if you want to trade this volatility, definitely. Yeah, we got MACD here on the bottom. We can see that we're going down and we've entered this bearish territory. We have the fast line cross the slow line right about when we started to pivot. So this is our pivot point here, which is basically the high when we pivoted toward downward world. And then we had this cross. 13. What is Spencer got you in the doghouse, man? Morning, RG. Spencer's on a tear lately. I think ever since we mentioned the bikini thing, ever since we mentioned just the idea of wearing two-piece swimwear, he's been just in a sour mood. Don't know what's up with that. So this is the pre-show. Oh, you get in trouble, 13. This is the pre-show, guys. So anything goes. Tell me what's going on. What do you think about the market? What moves have you made to adjust to the current regime, to the current atmosphere? What do I think Palantir will do today? Let's take a look. Palantir, the reason I haven't really looked at it too much, look at all my drawings, geez Louise, is that just based on this activity, I think there's going to be a period of that we need to consolidate. We need to establish, like, we're at this level. Look at this important level. We got bounce, a little consolidation, build up, and then we're right back down there. I think we need to consolidate, blow off steam. The tech sector needs to stabilize. And JMO just says, no, Palantir is going up. For my style of trading, I want to see a little more consolidation and maybe a couple green candles form before I'm terribly interested in this. And what I would be looking for is a return to the mean. Purple. Yeah, purple. Crazy. Have you guys seen those? It's purple mattress. I saw these commercials for ages on everything. I'm sure you've seen this. It's like Goldilocks. Have you guys seen these? This is the first I heard of purple. I had no idea they were public.
Your bed is awful. The raw egg test. Let me prove it.
She cooks eggs on a bed. This bed cooks eggs. Not only can you sleep on it, but it makes breakfast in the morning. So anyway, they got this lady. She's all about smashing food on beds. So look at purple PRPL. Public company just for this freaking bed. Purple innovate PRPL. Yeah, some people love the mattresses. I'm what did I get? I think I got a Ghost. Is that what it's called? I'm just a memory foam guy. Whoa. Earnings. Good earnings on this stock. I like the way this looks, guys. I like the way this looks. I'm not sure what the drop was, though. Not terribly important, because it looks like it still has strength. Please analyze the market, Baba says. We can look at QQQ and SPY. Yeah, let's look at this over a shorter time frame. Maybe get down to an hour. Was I not sharing my chart previously? Not sure. So what we get here, if we're just using Bollinger Bands, we get this with Bollinger Bands, you're going through cycles of squeeze and then expansion. So we can see it's really squeezed here, and then we expand when there's this volatility, and then you return to a squeeze. Okay. So I like this, guys. I like purple. So on the 4 hour, this might be it today. We got a couple really stubby green candles here. But the stock has strength. I mean, overall, it's been in an upward trend. Let's just go ahead and do one of these. Let's get the Bollinger out of the way. I think this is as good a point as I need to start. So you can see that always draw your trend lines when you're just doing these like basics trend or speed lines, whatever the hell you want to call them. Do them on the right side. All right. So we're establishing the support of our upward trend on this ticker, purple. And yeah, I did it kind of fast. This is the 4 hour and it's a big thick line, so it's not going to be totally exact. But at any rate, you can see that we just about hit that previous support and it served as resistance. So what you can do if you're looking at purple is draw that line, look at your swing lows, draw a better line than I have because I'm just doing this quick. And you can see a level that you want to see us break above. So I'm looking at the 4 hour. You see, or actually I'm looking at the 1 hour. So if you see a solid break above this resistance, you can look for a gap to close here. That's how I'm looking at it. So pop right about there. I mean, you can bring this down to the bottom of the wick. And then we do a little handy dandy ruler action. So from the current price point, well, this would be, let's just imagine that the breakout is right here. That would be about 10%. Nice, huh? On the 1 hour. And then this 1 hour, you can also see, here, let's see if VWAP plays a part here. Yeah, the VWAP's too tight here. You got to go to shorter time frames for the default VWAP to really matter. What price point is the breakthrough? So it's when it happens, because it could consolidate. And so since this is a sloping line of resistance, it will increase. The breakout point will increase with time. But there are a couple things going in your favor. So on the 1 hour, we see that the fast MACD line has passed the slow MACD line. Now let's look at the daily so we can do a little multi-time frame analysis to make sure that our multiple time frames confirm. Not as good here. So it crossed below the slow line here, and it's down in bearish territory. So what we need to see is some more price over time to see confirmation from this indicator. So, I mean, if I'm totally ballparking a price for breakthrough on purple, I would just say somewhere around 33 and some change. That's the idea. But don't take that. I'm not making a call on this. What I'm saying is draw your trend lines based on these swing lows, these corrective phases as we've gone up in this trend. And then you're going to make a sloping line of resistance that we need to break through to return into a bullish period, a bullish trend or an upward trend for the stock. So that's purple. Yeah, let's look at QQQ. I don't want to spend too much time talking about it in the show. We did some analysis of it last week on Friday. That is still kind of holding true. I got to be honest. Like, we had some good futures activity, and then we had some bad futures activity, and then today's not looking that great. But everything's still trading right within the ranges that we talked about on Friday. So look, guys, we've got a high here, we've got a higher high, and then we've got kind of like another peak here. So this is like, it's kind of head and shoulders, which is a reversal pattern that you see at the peak of a bull trend, positive trend. Yeah, ARC probably reflects NASDAQ pretty closely. That's correct. ARC K specifically, but the others do too. I'm sure ARC W looks very similar. This is tech. This is tech, guys. So I'm going to zoom in a bit on this. So you can see that for a long time, this blue line, this is our 50-day moving average. For a long time, we kind of, stayed pretty well above it. And then when we dipped down, we came back and met it. Now, if I put us on the Bollinger Band, we're going to be able to see the 20-day. And you can see that's even tighter. And it's almost like every time we touched it, we bounce back. And that's great trading territory. That's for the folks that like to trade options over time on SPY. You can do this all freaking day. You can zoom in on a shorter time frame, and since price behavior is fractal, you will see the same patterns occurring, but in shorter time frames. And that could be done. I don't want to readjust all my stuff, so I'm not going to go too deep into the hourly on this one. So we need to get back to today. Yada yada. So the top, just speaking specifically about the price action, that's a reversal, guys. That's a reversal. Are we in a bull trap? That's a really good question. Holy shit, Pyro asked, are we in a bull trap? Could be, yeah. Yeah. That's what you get. With something like this, you get a little bit of people coming in. They got a price target. They're buying the dip. But there's a lot of overhead supply. This is QQQ. That overhead supply needs to sell off. So if we close the Bollinger Band, because at this point it's just so expanded outside of our lower deviation, there's no point in using the Bollinger Band. Let's just look just at the price action. We have this sort of head and shoulders formation. You could say that the shoulders or the neckline is right about here. You could say that it's right about here, depending on how you're looking at the chart. I'm using this period of consolidation and then this open and this close as my neckline, right? Sup, NFT traders. What's your favorite NFT, John? Drop it in chat. So if all things go according to pattern, which they only do like a percentage of the time, like you could even say only like 50% of the time, it's going to be something like this, which I've already drawn, which is this yellow line, which would take us back to just about November, early November. Yeah, so bearish QQQ, bearish SPY for me. I think this is a bull trap. I'm looking for sectors that have strength. I'm not finding it in tech. Tech carries SPY and it dominates QQQ. So if we're rotating out of tech into energy, what do you think what do you think tech is going to do, and what do you think that the energy is going to do? Tech is going to go down. the ETFs that are highly weighted toward tech are going to go down, and then energy is going to go up. Which brings me to the intro to our show, since we're 1 minute from the open. So, producer AB, can you go ahead and just roll that intro for me, please?
3, 2, 1, 1.
Welcome into the open. We get technical. You should have investments in long-term growth. Unmute my screen. Yeah. Hey guys, I'm Neil Hamilton. This is Get Technical. It is Monday morning following a nice little sell-off in the market. We are in correction world right now. It is official. It has been official. We had a little bit of a bounce. I was just talking about it in the pre-show, a little bit of a bounce up from some prior support, some prior resistance that has become support. And my take, a little bit of a bull trap, guys. Let's focus on where the strength is and not where we hope it is. All right. Corrections are good. They're good. All right. If you believe in a holding, if you believe in an ETF, if you believe in a stock, you're holding it for 5 years. All right. If you believe in it, that's an investment. But for trading, we cut the losers and we go where there's strength. And where is their strength? It's oil. By the way, guys, if you're taking investment and trading advice from someone who looks like me on the internet, you're doing it wrong. Don't do that. Do your own due diligence. What this show is about is me showing you how to use technical analysis to the best of my abilities to succeed in the market. All right. And where we see it is in oil. In oil. Agenda for the show today. Oil is drinking tech's milkshake. If you guys have seen There Will Be Blood, give me a 1 in the chat, because that is what is happening. Energy this whole time has been drilling a hole underground under the Gigafactory in Texas and Berlin, the Tesla Gigafactory. And they're sucking the energy out. They're drinking Tesla's milkshake. That's the markets. It's a jungle. And what we do as investors is go out and look for the apex predators and bet on them. And it's changing all the time. All right. We are drinking the milkshakes. We drink milkshakes. All right. So the flavor of the milkshake right now, of course, is in dirty energy. It's oil. This is what we've been talking about for a while. Actually, we saw it just by accident. I will admit, by accident, that some of the initial stock picks for this show, like a couple weeks back, this show was like 3 or 4 weeks young. I don't know how old it is now, but were oil, OXY, Occidental Petroleum. VET came a little bit later, but we were looking at basically Exxon and Occidental Petroleum. So XOM, OXY were the stocks we were looking at. Why were we looking at them? Because they had downtrends, sustained support, or sustained periods of consolidation, and then we're starting to show a return back up to a previous support level, rounding bottoms and double bottoms. That's where we got the whole rat meme, right? That's where the whole thing came from. So we are looking at those still. They are still in play. We don't need to go crazy looking for new stocks all the time, because we're not in that kind of market. When the market gets the way it is, and you have big sections that used to be really high growth sections that you could hang your hat on and everyone could just stick a bucket out the window and it'd fill up with gold and they'd bring it inside, you need to focus down. We focus down on where there's strength, right? And right now we're looking at oil. That's just how it is. All right. Still fun, but we got to be reality based. We focus on what is happening in order to predict what might happen, which is likely to happen, not what we want to happen, right? Yeah. Shout out to OXY. This is right now. I got XLE I should go through this stuff. So one of my high type flags, if you guys know what the high type flag is, give me the ticker in chat. It's NMM, NATO Mama. Got a little bit of a rejection, but you know what? Earnings are today, and I'll talk about what I do when I see a rejection in my breakout. This one's special. So this is a really good use case to talk about, and it's still in play. So it's still a pick, guys. All right. So don't complain about me focusing too much on silly goose times and education when I should be giving you picks. You ravenous animals. I got picks for you. And we've got a stock pick session with the trading chick. If you don't know her, follow her on Twitter. She's going to come in and give us some of her favorite stocks that she's looking at right now. Hopefully some rippers. And then we'll go through them from a technical perspective together. And then after that, if we have time, I am going to let you guys run the show. Chat decides what happens next. All right. Pandemonium. Absolute pandemonium. Might ensue. It depends. All right, folks. Let's just look at XLE. This is the Select Spider Trust Energy ETF. Right? Yep. And guys, and just a reminder, if you guys want me to wear a rat suit, if you don't know what that is, just ask someone in chat. They'll explain it. If you guys want me to wear a rat suit, we need to get to 800 likes on any video. 800 likes, any video, it happens. We go shopping and wear a rat suit. But let's look at what's happening in energy right now because we're in play. The market is open. All right. So what I talked about previously, like 10 seconds ago, was that we've seen a long downward trend with oil. And we've seen it quietly in the shadows, pulling together its strength and returning to prominence. All right. It's formed. All these oil stocks are sort of reflecting the same thing. They have formed double bottoms and are returning to strength. All right. This is like the last Star Wars movie where Palpatine shows up and everyone kind of hated it. But it's reality. It is reality. All right, guys. So a couple interesting things happening here with XLE. Full disclosure, I own a bunch of this stock. I rotated out of my tech stocks that were bleeding and into energy ETFs. I own a bunch of it. And I bought a few calls on some of the holdings within this. So I highly recommend that you look at ETFs that have strength, look at the holdings within them, find patterns within that in those, do some technical analysis and due diligence, and then make your quick, fast plays there and make your long-term plays with the ETFs. So at any rate, we had a gap start right about here. It's ending right about here. All right. I think we're going to close that gap. So if you want to look at this thing as a trading opportunity, we're going to draw our little horizontal line right there. I think depending on how the day goes or the week, right here, I think you've got potential for a sub 1% move. Not a big deal, but it's pretty good if you're trading options, right? Use options for leverage. This one is approaching full maturity of the double bottom, where we're going to hit resistance around this level. We were in consolidation station. I expect us to return to consolidation station. You can think of this as like a train. This was where you got on. You said, oh shit. And you like jumped over like a gap in a bridge. And then you consolidated over a period. And now we're going to return to the station. And that's an opportunity for folks to hop on. If you guys haven't been, Producer AB, thank you for sharing my screen. If you guys haven't been in any of these oil stocks, XLE, which is an ETF, XOM, VET, we're looking at consolidation as an entry point. We got to take a breather, right? So here's what I think. I think we hit resistance right about here at 50, 55 and some change. All right. We look at that as entry territory. All right, let's look at something a little bit hotter. VET. This is the call that when I mentioned it to one of my, I don't know if I can call him a mentor per se, but he's definitely someone I've learned a lot about technical analysis from. Wait, people are saying no screen. Is that producer AB? Hop in. What's going on?
So I think we have the screen now. I think for a second we didn't, but I'll put that one on me. That's fine. Oh, also
Okay.
while I'm here, can I remind you of something real quick?
Please.
We have to announce a winner today from a challenge we did last week.
Skew Boss. If you are watching the show right now, Skew Boss won our Benzinga Pro annual giveaway. So Skew Boss, if you were here, big kudos to you. Aaron, did you contact him or her?
Yeah, so I think I sent him a private message on YouTube if you can do that or something. I don't know. I tried to find a way to message him, but not sure. So Skew Boss, if you're out there, find us on YouTube. Email us at powerhour@benzinga.com.
Can you put that email in the chat? Yeah, so someone won because they called out when we got to 250 likes on the video. They won an annual subscription to the best damn stock research tool on the planet, Benzinga Pro. Anyways, looking at VET, guys. VET. Similar thing, except for we got all these nice gaps. So that's why I'm excited about this stock. It's still got room to go as long as we have continued strength in oil. I would expect this one to close these gaps. I'm not sure about the time frames, but what we have right here is some important events coming up. I think these are both earnings, so they're just not sure about the date. Oh, they both say March 8th. What's the date today? Oh my goodness. Oh my God. Today is a big day for a lot of my holdings. So VET overbought. It is in overbought territory. Absolutely. But it has an event coming up. So we've got our nice MACD trade signal holding strong. We're in bullish territory on the MACD. It is overbought, but not terribly, right? I think it might just spike up and go nuts if we have positive earnings. We want to keep going up on this one. So my price target for where we are is still a resolution of a rounding bottom, which actually hasn't happened yet, guys. So what I'm looking at is measuring from the bottom to the top. So we take the depth of your rounding or your double bottom, rather. I keep saying the same thing, but you measure it and create your price targets the same way. I'm looking at about a $12.48 price target. And then if you're getting in today, that's going to put you at about $12.48. About 64% upside potential. So pretty good. Tesla bounce. We can look at Tesla. Well, actually, before we look at Tesla, I want to look at the high type flag, NMM, because there's something important to look at here. Let's go to our weekly. Let's look at the longer term picture, the big picture, if you will. Don't mind my notes getting condensed. Just ignore that. Focus on the price action. Always focus on the price action. This one is actually definitely in the way, so I'm going to move that. I used this blue trend line. I'm going to go through each one, guys. I know it's messy, but I'm going to go through each one. I used this trend line to mark each resistance level as we trended down. And we can see, I did this before this little failed breakout that we had. And you can see that from our high, tight flag that we had an attempted breakout and it hit that level. This is why it's so important for you guys to draw speed or trend lines on the right side of your tickers. I still believe in this, and here's why. So I'm going to go to the daily. We had a rejection. Something you need to know about these breakouts. From failed moves, which we had, which means we had a breakout above resistance. From failed moves come fast moves in the opposite direction. So in many, if not most cases, when a stock fails to break out, it will go sell off in the opposite direction. All right. And you can use that as a trading opportunity to completely reverse your position and go short. This is a bull trap. By definition, this is a bull trap. But look at this. We're back in consolidation station. We did not break our little support area. We are still holding. What that tells me is that institutions still want to hold this thing, probably going into earnings. We're not overbought. This period of consolidation is supposed to be dried up volume. I like that right here. So I am still expecting a like 60 to 80% breakout from this ticker. And of course, it must break above this resistance. All right. So I'll take a couple from you guys. What's running? Oh, Teladoc is taking a beating. GUSH, I looked at it briefly. So GUSH is the direction oil. Okay, this is a leveraged ETF. Burnout Xbox. This is a leveraged ETF. So anything that goes on with its holdings, it's going to have twice the movement, up or down. All right, so that means this thing will thrash you around. But again, when we previously talked about was it VET? Closing the gap here is like sub 1%, right? So if you're using, if that's, if you're just using common stocks to try to make profit on that, it's not a lot unless you have a ton of money to put into it, right? So you look for some form of leverage to amplify the amount of money that you're putting in. That also amplifies the risk. But if you're doing your technical due diligence and you're putting stops in place, like we talk about on Get Technical, you're doing it in a smart way. So if you look at GUSH, this puppy, looking pretty good, looking darn good. So with, as always, leveraged ETFs, you don't want to hold them for a really long period of time because they behave erratically. They are trading tools. They are not investment vehicles. So this thing is on a, this thing is going. So if you got into the trade at some point, kudos to you. Let me change my time frame really quick. Just look at the 1 hour. Looking solid. Looking very solid. Let's get a little price channel on this. So I'm going to use my parallel price channel tool. Let me blow this up a little bit, just to give us an idea of this trend, starting at this pivot point, this current trend that we're in, to get an idea of what our bounds are for trading.
Wait, Neil, can I hop in here and tell you something kind of sad?
What?
So I bought GUSH on February 16th, like right before that big winter freeze in Texas, just thinking there'd be like a, some attention on energy and stuff. Sold it 3 days later for a $20 loss. So I bought it on February 16th. I don't know if you can look at that on the chart real quick. Sold it for a loss 3 days later. Sad.
Wait, on 16th?
Yeah.
Oh, wait. So you sold it during this candle?
I sold it on the 19th, yeah, for a loss.
It's okay. That's okay. That is okay. As long as you're winning more than 50% of the time, you're good. The best traders in the world win 6 times out of 10. And we also admit our mistakes on this show. So thank you, Aaron, for sharing. Yeah, GUSH, I agree. So some of you guys in chat are saying that we're going to enter a period of consolidation. Totally. Yeah. I mean, after you have, which a lot of these have, which is RSI going above 70 and getting into overbought territory, you need a little bit of a breather, which is going to create a shelf, a period of consolidation, or a short corrective phase where bulls can enter. That's an entry point. Absolutely. That is how you learn. If you guys remember Solar Edge, I was trying to get into, I wasn't sure if there would be like some form of sympathy with clean energy, solar. So I was really on some solar energy stocks that were showing similar patterns here, like rounding bottoms, cup and handles, stuff like that. So some reversals and some continuations. It got stopped out. So, if you're getting stopped out, you're still losing money. So I lost a little money on solar. So that's why I'm really focusing in. And I think everyone should be doing this, is focusing in on the sectors that are showing strength. This is part of the rat system. Rummage for stocks that have been tossed out and have had long sustained downward trends followed by periods of consolidation. Assess the stock in light of large economic trends and their sector strength. Technically analyze the price, volume, and timing. That is the RAT system, R-A-T. I removed the final T. Got a copyright strike from Rat, my favorite band. Hurts. But that's what we're doing. We're focusing in. Focusing in on the biggest, stinkiest piece of cheese. Does SLGG fall under the RAT criteria? Let's take a look. Mayhaps. It's a young stock, so it's tough to say, but this is a wild one. Super League Gaming, is this esports or esports community, cloud-based content, blah blah blah. Okay. Potentially. So here's, I don't know, as a group of stocks, how betting is doing. Is this betting at all? Okay, no, this is just cloud-based stuff for esports teams. I don't know if there's huge sector strength here, and I would actually, my initial reaction is probably no. I don't think so. It's oil right now. It's oil, guys, across the world is oil. So this is one of those things where, like, you might be really interested in tech companies. You might be really interested in autonomous vehicles. You might be really interested in AI. You might be really interested in esports here. I'm really interested in all those things too. I believe long term that these are the future FANG stocks, that there will be a small group of big companies that build a new platform for innovation. Just like Microsoft, Facebook, Amazon, Netflix, Apple, and Google have done. They created platforms for other companies. All right, that's Web 2.0. But I believe that we are entering the next phase of what can be done with this big old network that we call the internet. All right, the next phase of what can be done with transportation because of that, because of innovations in energy storage, innovations in connectivity, telecommunications are enabling phase 3. And because of that, I'm looking at long-term potential from small stocks right now. But that is not what's showing the immediate strength. That's betting on the future. And right now, the future is getting beat up and people are moving into oil. So we're focused for trading. We're focused on the here and now. For patterns with breakouts, we're focused on the here and the now. For long-term stuff, if you believe in it and you have a good fundamental reason, and you're actually looking at like the management of the company, you're paying attention to the technicals, you're looking at its strength against its peers, and checking with others too. This should not be a solitary thing. There should be no solitary people in trading among retail traders. I don't do this alone. Talk to people. That's what you're here for. Check, bounce your ideas off each other. Let's see if you got it. If it's SLGG, maybe we compare it to another one that might be stronger. Blah 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 blah. We move in a pack. Oil is not looking good today. Yeah, maybe not. We're in consolidation station. Look at Alex LE. I mean, we're green on the day, so I'm not really sure. What is not looking good by your definition? It's not roaring up like 10% every single day. I think the other one is, what's the Vanguard one? Is it VTE? VT? Vanguard Energy. VDE, that's what it is. I mean, this little tiny little green candle, dude, this is just a continued trend. It might enter some sideways consolidation. But look, this is the resolution on VDE. This is the Vanguard Energy ETF. Which is when they say energy, it's still weighted toward, this is ExxonMobil that's really carrying this, with a bunch of other dirty energy stocks. We made it. We resolved this. This is where the rats were gathering. All right, gobbling up some cheese, and then we got up here and we made it. It's time to celebrate. This is the end of Mighty Ducks. We're singing "We Are the Champions." if we got in on this. All right, guys? That's a resolution. Now we look at because we reversed, once we had that reversal, we had this big, powerful move up. Now we're watching for what does the trend look like now going forward. This is like almost parabolic. So if we continue on this, that's just absolute madness. This is mountains of madness. Not impossible. Definitely not impossible. But it moved like that because people were looking for that resolution of the pattern. Yeah, guys. Yeah, we're not doing wolves, we're rats. Okay, so I guess this is pretty free form. I went through my stuff. The whole thing for me right now. Let me look at some of these other ones. LDL was one that we previously pointed out, but that was a cup and handle. I don't really have any here. 5-9 is 5-9 still alive? Here's one that I got screwed on. Right, so 5-9 was a cup and handle. Pivot point here. Period of correction that rounded back up to that previous high. Downward movement, move back toward resistance, and then a failed breakout. This is an example of a failed breakout that goes all the way south. So with this one, we were looking for, following breakout, a return of about 19.5%. But when you get that failed breakout, you get fast moves down. So that's where you can just go short pretty reliably, because then you got me holding the bag and you go short against me. We can look at OXY. Yeah, we like OXY for sure. But OXY is like, we're singing "We Are the Champions" on OXY, guys. If you guys were in it, give me a 1 in chat. My profit has been taken, friends. I like to take profit before we get to the exact target price. Why? Because that's when everybody starts selling. And it depends on how you're doing it. But I recommend, as a friend, not as a financial advisor, taking profit before you hit the exact technical sell point, so that you're maintaining liquidity. And because other people are going to start selling off too, so it's going to push you away from that in a lot of cases. All right, this ain't 2020. This ain't the moon. we're not going to the moon. We're trading technically, tactically, sticking to proven strategies that have worked for people over decades and decades and decades. All right, so we're protecting capital and we're taking gains where we have a lot of confidence based on the proven stuff. What is the new base for Oxy? There's not really a new base yet. Like, it could be with all oil stocks, you could be looking at, we're back in consolidation station. But just look at the previous consolidation before the double bottom, which like every freaking oil stock has right now. You can play all of them. I like to bounce around and see which ones have cheap options at different points and then play them that way. But I mean, like, you can look at where it's trading right now. It's holding support at a previous support level. Like, look at this. Let me just, how can I zoom in on this? So this red dotted line is where it's trading right now. It's exactly where the whole body of this previous candle was. So this is the February 27th candle. All right, so you can look at this as the new base of the shelf, right? So we can just draw a line right here. Boop. And then what we can kind of expect for all of these, when I say consolidation station, is a little bit of this, a little bit of that. That's the entry point for bulls. Hop on the train. Choo-choo. With summer coming and opening up, Oxy looks like a strong swing trade. Sure. I know oil prices are up. What is Oxy? Is Occidental Petroleum. Yeah, it's oil. And then, the king, XOM. Why is it the king? One is it just has so much strength behind it as a brand. It's ExxonMobil. And then two is just look at how voracious it has been with its trend. It has adhered consistently to an acceleration of slope. It has consistently shot up. And then look at this. Like we had some one swing high, one swing low, and then chugga all the way to the top. So XOM, you'll see this called out, like Miss Izzy, who's a friend of the show. Great follow on Twitter. If you look up Miss Izzy, has been trading this thing up and down. All right. There's no reason for us to talk about other stocks and get all YOLO on this stuff. We're here to make money and protect capital. Yeah, Oxy's got a lot of good fundamental stuff going on. Burnout. Burnout says Oxy is entering into carbon capturing. There's a lot of diligence that you can find, due diligence that you can find on Oxy that paints a really good picture. Paints a very good picture. And then I just want to point out a theme for the day as I'm doing multi-time frame analysis. There's your $1 million word, $1 million phrase. If you're going to be anal. And I've drawn on the right side of my price action a line at each one of the swing highs to give me an idea of my trend. And we can see that if I let that continue all the way past these points, it's not just a little short-term thing. Price has memory on charts going back decades. Price has memory. So this is why it's good to look at things from a very large time frame to get an idea of what's going on. And you can see some past notes. But if you look at this trend, look at what this line did when it continued. All the way through from ending Jan 6th, starting April 22nd. April 22nd of 19. April 22nd, 19, we use this line. This is still the trend that we are returning to now and breaking out from. And you can see that there was a gap up with, well, I don't even know if that's a gap. It's not really a gap. You can see that that served as a resistance line for us. And then we broke out of that resistance and then it became support. Resistance becomes support when you break through. That the body of this candle sticking right on that line. Baby. All right. So we are 1 minute past 10. That's enough silly goose times with Neil. Now it is my great pleasure to bring onto the show a new guest. This new guest has quite a trading background, definitely a student as we all are. I understand is taking on some new challenges in life. The trading chick will be joining us with some picks, with some stocks to look at. So producer AB, can you bring on the trading chick?
What's up?
Hey, how's it going?
It's going well. It's a good morning. Nice green morning.
Uh-oh, I'm hoping we don't.
Get out of here, producer AB. What are you doing? I'm sorry about that train chick. That never happens, I promise.
No, it's okay. The more the merrier. It's going well. How are you? How's life? How's your portfolio? How's it all?
The portfolio is good. So here's what I've done. I want to ask you the same question in a moment. So I'll just give you my scoop, which is I was long on ARK ETFs, and just loving the growth that we've been having, all through like since the COVID dip. I don't have anything on my screen, producer AB, and was loving it. But then, of course, we had some serious signs of weakness, and then we had some sell-offs. So it's time to stop bleeding. And I have been in the past, Miss Trading Chick, the type of person that averages in as we go down. But that's when I was a much more passive investor. So what I've done with those ARK ETFs, and it's all companies I still believe in, is sell as close to the top as possible. And I'm keeping an eye on them. They're all on my watch list, but I'm looking for the bottom. But in the meantime, I've rotated into energy stocks and energy ETFs.
Look at you. You played it better than I did. You played it better than I did, for sure.
Wait, tell me your story.
Well, what do you mean? Story of like this week or of my life?
Not that, well, let's just talk, let's keep it to this week, and then maybe if we have some more time, we can get to know each other a little bit better.
Okay, cool. So I've been getting a little bit more into technical analysis as I grow as a trader. Obviously, I think that that's an important thing to learn how to do. And I definitely saw all the warning signals. And did I do as much as I should have? Absolutely not. I actually just made a video yesterday. I posted it on my YouTube. Check it out at The Trading Chick. But yeah, I kind of like averaged down, like what you were saying you used to do in the past before you got better at it. Yeah, that's what I was doing.
There's nothing wrong with that.
No, I mean, I think that this is definitely a temporary thing. I don't see it going and like crashing the markets just because the treasury yield for the 10 years at 1.6. I think that's not gonna, I hope that's not gonna crash the markets, but I don't think it will. So hopefully it'll all go back to normal, and I just learned for next time.
Yeah. I think this has served as a great learning opportunity for a lot of people. I mean, I definitely took a hit. I took a significant hit to my portfolio before I finally put my cards on the table.
Yeah. I mean, I did some selling. I just didn't do as much as I should have in hindsight.
So what are you interested in right now? Are there any individual tickers that you like?
Yeah, I mean, there's a few. I really like Vuzi right now. Kathy Wood invested in it after I did.
Oh, wow. You front ran.
Yeah, I mean, Kathy, come work for me. But yeah, I really like Vuzi. I really like Vizlink. I kind of feel like just right now, for me, I feel like the best thing that I can invest in is the future. I mean, I always feel like that, but I think that these two companies especially are going to be game changers in the future. So I'm really liking the dips here. I've been scooping them. I told my mom to scoop some.
What does Vuzi do? I don't even know anything about this company.
It's like augmented reality, and from what I understand, it's like these glasses basically that you wear, and it will show you like while you're doing something how to do it. So I don't think that they have medical applications right now. I could see a thing in the future where like potentially doing a surgery and like they don't need necessarily the doctor that specializes in it to be next to them in order to complete the surgery. So that's the way that I think about it. I don't know I don't know what's going to happen, but that's kind of what I think is going to happen.
I don't think you're alone on being bullish on the augmented reality glasses. Like, there are a ton of applications that I'm not totally aware of, but it seems like sort of like you said. So you said in a medical setting, which totally makes sense. Like maybe maybe the surgery is one thing, but you're looking at a patient's chart or something like that, and like where people are usually walking around with clipboards, they could look at a QR code, for example, and then it could open up like a big dashboard that shows all the information about the patient, so they don't have to carry around a laptop or something like that. And I can also imagine it like in professional settings where like people have a bunch of monitors and stuff like that, but they are using glasses to get more information more quickly without having to do something old school like using monitors. At any rate, you're not alone. Matt Maley, good friend of the show, who actually kind of called the correction, timed it pretty well, is big on augmented reality.
Matt Maley, I need to follow him.
Yeah, definitely follow Matt Maley. Okay, so VUZI. Are there any other stocks that you like?
I like VISL, Vizlink.
That's one that I haven't actually looked at. It's just LiDAR?
No, I don't think so. It's like wireless.
Okay, like telecom.
Yeah.
Yeah, I think you're looking at a bounce.
Oh, that's good.
So when I look at this, I just see it.
What you're looking at.
I mean, right away. So I've got the 50-day moving average on this, and I just see it floating above the 50-day, touching the 50-day, and then holding that support with these bullish candles here. The body stayed above the support. meaning that this might just serve as a very easy, just a very quick and dirty, put on the 50-day moving average as a moving support line for us to maintain trend and then hopefully get into another period where we're kind of, let me get my paintbrush tool, where we're kind of just floating above the 50-day.
Yeah, so I actually added to that this morning, and I also added to Vuzi this morning, just a little bit.
I don't think there's anything wrong with that. So you're buying the dip.
Yeah, I like to buy the dip when it comes.
Yep.
It's a thing that I like to do, a hobby, you might say.
It is. I mean, that's probably served you extremely well over the past
It
year.
definitely did. In March, I bought Pinterest on the dip because I remember I was back. We had like work from home. And I was using Pinterest all the time. I was like, where am I going to go when all of this is over? Blah, blah, blah. Like looking at my mood boards, all this stuff. And I was watching CNBC and Jim Cramer was only talking about like Snapchat, Instagram, Twitter, Facebook as the social media companies and was never talking about Pinterest. And I was like, I need to buy that. And I made a lot on that one. That was a good one.
Yeah, I think a lot of people have done pretty well with Pinterest because they slept on it.
100%. It's totally slept on. Nobody gets it unless you use it like me.
I don't get it. I don't get it, but I mean the technicals are there, and I've seen people make a lot of money on it. Like this is great. Like look at this. Have you been holding it or just kind of trading it?
Which one are we looking at? Pinterest?
Yeah.
I've been holding. Pinterest is in my long-term hold account, and I don't trade it, but I've been holding.
Do you think it's going to drop more than where it is right now? It is holding nice support here.
Yeah, I don't think so. I don't know. I don't think it's going to drop. I still feel like it's still slept on.
So here are the two scenarios. This is the way that I look at Pinterest and I look at QQQ, pretty much anything that's based on technology right now.
Show me.
Is you see exactly this. This is exactly what QQQ looks like right now.
Okay.
Well, actually, no, this is more like SPY, where SPY has the rounding top here. QQQ has more of a head and shoulders. But we've got this long trend that we've all been loving. And then we get this rounding reversal. But then they each have like these 3 previous bounces off of this level. And we're holding it pretty damn well here. This is where, like, right here is like where everyone collectively crapped their pants last week. Was this wick going down?
Yeah.
But then it came right back up, and the body stayed right at that support level. So the big question right now is: are there going to be external events? Is there going to be enough of a rotation into technology to make us bounce here? Is this, that would make this just the most like 5-head buy the dip moment ever. Is like you're looking at the entire market while everyone else is living in fear. You're buying the fear and then returning back to some highs. Absolutely possible. Absolutely possible. But then the other thing is, if we don't hold the support, which today we're looking strong on pins. This is Pinterest, PINS. If we don't hold it, we need to resolve this. And that's where you would set, if you want to go short, which it doesn't sound, you could actually hedge your position. So if you're long on this long term, you could hedge your long position so that you're staying flat, where while you're losing money on your long for a short period of time, you can make money in the short term by going short on it, looking for a price target of, if I draw these pivot points here, we've got this pivot point over to here, which is the bottom of the wick on this red candle. And you could, I would get puts on it. And then just hold shift. I always forget my ruler tool. And then for a resolution of the pattern, if the pattern actually goes this way, which it definitely can. There's a ton of overhead supply in tech that is being sold off. But that's okay if you're holding it long term. You just want to make money off the bad stuff that happens in the short term to supplement the money you're going to make in the long term. So what you can do is go short on it and look for a price target of 42, which is like, that's a big ass drop from where it is right now. So let's go ahead and just let's draw a long line here.
Okay, so that little square thing that you just drew on that, I've seen other people do that on charts. How did you do that?
So that one eludes me all the time when I'm in full screen, but there's probably two that you've seen. The first one that I just did is just the ruler tool. So if you're using Trading View on any platform or just like straight up proper Trading View, which I'm using right now, you just hold Shift and then start dragging it. And the cool thing about it is horizontally, it will show you how many bars, so you can measure time. So since I'm looking at a daily chart, this is saying that over this is 13 bars, so this is a 13 trading days. We have descended 25% in 13 trading days. That's bearish as you get. But then what I do is do you see the middle horizontal line on it?
Yeah.
I take that down to the breakdown point on my bearish continuation pattern to find the target price, which is usually the depth or height of your bearish continuation pattern added to the breakout or breakdown point. So just using that middle line makes that super easy to do. And then I come down and I see that from right here, I'm just gonna use my ruler tool again, to the target price, that's about 36% decline in the bear case there. But time will tell. I mean, we can let's do a little multi-time frame analysis and look at this on the hourly. I'm going to get rid of some of my some of this stuff.
Your beautiful creations.
Yeah, my drawings, precious drawings. All right, so we lose these. And still, we see it like looking strong, showing strength. There's two things happen. Oh, two good things happening here for pins. All right.
Let's look.
Yes, it is good. So what we've got is, again, we're holding support right here. See the previous support, because price has memory. This previous support still matters today. We're holding it, and then if we bring up our MACD, we can see that the blue fast line on the MACD. Hopefully, you guys can see this on the screen. Has crossed over the orange slow line, which is a bullish indicator. That's a buy signal for a lot of people. So we've got a buy signal on pins, PINS. But play it wisely and watch your short term.
Wow.
Keep your stops tight. I would say a stop.
Pins.
I mean, that's the world we're in right now. Right, the world we're in right now is all of the companies that people love are getting beat up. And the companies that people kind of hate, like the oil companies, are doing it really well. And that's just how the market is.
Yeah.
It's not the market doesn't care about how you feel about a stock in general. So we're seeing a rotation away from these sort of FOMO meme and growth stocks into oil. And so that's why I've been focusing on that. But could be a buying opportunity. It is a buying opportunity. Corrections are good, guys. Corrections are good. At the end of the day, as long as you're smart enough in watching the charts to not lose your hat when there's a correction, corrections are opportunities to get in on good stocks. And they also they let off steam. They allow the market to take a breather because everyone's been going nuts, like everyone's just like all hopped up on energy drinks and YOLO stocks. It allows us to take a breather, take a little nap, come back with recharged batteries, and then re-enter a bullish trend that we can rely on without having to worry about a bubble popping every single day.
Yeah. I was watching Kathy Wood. She posted a video, I think yesterday or a few days ago on YouTube, and it was all about like her ARK ETFs. And I was looking at the ETFs. I think that I might buy some of those just like right now during the dip. I feel like it would be a good time to enter. You're waiting on it.
Yeah.
What are your thoughts?
Well, I think Kathy Woods and her whole research team, Kathy Wood rather, and her whole research team, I agree completely with their vision for innovation. I mean, she was an analyst during the .com bubble, and was really big on Amazon. And I believe Amazon was the ticker. If you guys in chat know, if you guys know, which ticker it was. I believe it was Amazon, but other people, yeah, that's what it was. Cause she had kids, and she worked at this firm, and she was using nothing but Amazon because she didn't have time, and no one believed in e-commerce or buying things online. This is a while back. This is this is .com bubble stuff. And she went long on it, and everyone was like, you're an idiot or whatever. And we all know what happened with Amazon. Similar thing with Tesla.
Yeah, same with Tesla.
Yeah. So in general, I think that she's looking for a 5-year time horizon on every single one of the investments in ARK, ARK Invest, and she's looking at big platform changing ideas from companies that are going to disrupt technology as we know it, in each of the sort of themes that she has in her thematic ETFs. Yeah, she has vision, BW. I agree with you 100. Guys, okay, so really quick, I just have to address something really quick, Miss Trader Chick. I got a question about oil stocks. What is happening with them? We're in consolidation station, guys. We've resolved most of our double bottom pattern. This is the end of the Mighty Ducks. We're sitting around the fire. Producer AB's got an acoustic guitar. Trading Chick is doing the singing. She's singing We Are the Champions. And we're enjoying it. We're making s'mores. We're eating s'mores. We need to take a break, guys. We're blowing off steam. But this is a shelf that is forming, guys. And then let me look at VET, or not VET. Look at XLE, ETF. We're holding the support line. All right, guys? We're holding this where the gap broke down. Or what is the word? The other end of the freaking gap from the past is serving as support right now, guys. All right? Getting ready for Mighty Ducks 2. That's absolutely right. There's many sequels to come, my friends. Many sequels to come. All right, so I wanted to look at the ARK ones because that is on theme right now, which is our beloved sweet little baby stocks that we love so much are not being treated right. People are putting baby in a corner is what's happening. And we're looking at what we're going to do in the aftermath. So something interesting here, Miss Trading Chick, is that we have the 50-day moving average serving as one of those nice little bounce points, right?
Mm-hmm.
And I can use the 20-day to actually the 20-day doesn't really work for this. So like with different stocks, different sectors behave a little bit differently, guys. And so your moving averages and your trend lines and your technical indicators your mix is going to change based on the stocks. If you like your mix and you want to stick with it, then only trade stocks that behave the way you like with your technical indicators. If you're more flexible, then you need to know that you need to change your technical indicator mix to match the behavior of the stock. Different stocks have different types of buyers and sellers. So in general, when we're looking at ARK-K, I could probably pull up a better moving average or a better line to give us like bounce points. But you can see that as long as this trend has gone on, we've crossed this 50-day, and then we bounce, went up, kind of crossed below, bounce, kind of crossed below. But this is like a true bounce. Like the body of this candle lined up so nicely, like perfectly with the 50-day moving average, and then we just floated like majestic angels on little floaty clouds. But then we're at this world that we're in now, which is this kind of like shrugging little reversal. And you can see that the gap that we had was right down below that 50-day moving average, right down below it. So what do we want to see to give us a clear entry signal, like a clear conservative entry signal, just based on past behavior, would be across above the 50-day, right? But then something, if you're more aggressive and you're really paying attention, is some type of reversal pattern, which we don't see on the daily. Right now, this is just down, down, down. But when we want to circle around this stock, we need to start to see it holding some level of support and re-enter consolidation station. So what I'm going to do with ARK-K, I'm going to delete all my drawings. I'm going to draw a line with where we are, which we seem to be holding this is some kind of level that's important, is around these two candles. I'm actually going to use a rectangle tool because it's not exact. I'm going to use the top of Friday's candle, or the bottom of Friday's candle and the top of today's body, and say this is where we are. This is the line in the sand. There are all kinds of other indicators that could be turned on. You could be watching someone that knows a lot more than me or is way more observative of ARK and what's going on, which we can do if we have more time. But right now, what we want to see if there is going to be a bounce is a bounce at this level, which is actually, I could draw this rectangle down a bit more because we had a little bit of an impulse pivot here starting at the December 1st price level. So other indicators that there might be strength coming back in. Number one, it's oversold. RSI is below 30, right? So it's an oversold territory. That means that it's looking like it's on sale. We've got a clearance sale on ARK K. We want to see, for another indicator to get in, we want to see our fast MACD line cross our slow MACD line, which is not happening at the moment. But let's zoom in. Let's get down to an hour and see where the action is. And you can see that we've got some pretty steady consolidation. We had a little dip down on the 1 hour, and we got some pretty steady consolidation within our little support triangle. And on the hourly, on the MACD, our fast line has crossed our slow line. Buy signal. Buy signal. So yeah, Aaron, Bree, you do not get to have a lunch until we get to 200 likes on this video.
Yeah, true.
Thank you. We got to keep him in line. But yeah, so that's my take on ARK. Is, I mean, if it holds support now, it looks like it's looking like a buy a dip. I would like to see a little more of a consolidation to make it look like an actual reversal pattern, because we've established. I mean, how many days is this? I'll do that ruler tool.
Oh, love the ruler.
The ruler rules. You got to have it. So over 14 days, so it's 2 weeks of trading, this thing has been in a downward trend. This is a downward trend. So we need to see some type of consolidation before we start going in the opposite direction. There's no like outside crazy event that's just going to make us shoot back up. The price is going to zigzag a bit. That's just how it be. Is more so Burnout Box asking how is more pain coming for tech stocks? My take on that is yes. So look at QQQ. I think that these two little up candles to rallies are what you call a bull trap. I think that more pain is yet to come. But we'll see. Why? Because we had like some big external economic factors, like the stimulus announcement on Saturday, that aren't doing much. They're not really doing much right now. And it's just the way that it is that people have rotated out of tech and rotated it into oil. I know I sound like a broken record, but that's what's happening. That's like that. I don't know how I could restate this so much, guys. We love all of these names and we love all these brands. We love our tech stocks because they've been growing so much. Right now, they're not doing that. So let's focus on stocks that are doing that. Let's make money on those until whatever other stock starts doing that thing that we like. But right now, it's oil. It's your XOM. Right? That's the direction we like stocks to go in. We don't like it when stocks go, whoops, down. All right, Mrs. Trading Chick, it has been an absolute pleasure having you on the show.
Oh, thanks for having me.
If there's anything, number one is let's drop the YouTube link in there, producer AB. Let's make sure that everyone gets over to the Trading Chicks YouTube channel and subscribe, like and subscribe. Also follow the Trading Chick on Twitter. Your handle is just the Trading Chick, right?
Mm-hmm.
Okay, cool. Let's make sure we get that dropped in. And then what I want to ask you is just one final question for the show to leave on. What is your absolute favorite stock for 2021?
Oh God, that's hard. I don't know. I love EvoFem.
Oh, what is it?
It's EvoFem.
I have no idea what that is.
Okay, I don't know if it's gonna be like a 2021 stock, but it's like my favorite stock.
Is it the biotech stock?
Yeah, so they make like females haven't had a new type of birth control in forever, and they make like this single-use, non-hormonal, on-demand birth control for women that like kind of acts like lube. So
Got
you
it.
can basically,
You apply it topically, and it has more uses than just birth control, it sounds like.
exactly. And they also have a female chlamydia and gonorrhea preventative treatment in the works right now. So I just love this company.
Yep. I mean, those are clear and present needs. Like I don't know the actual stats, but I would venture to guess based on other STDs that over half of the adult population has had at some point chlamydia, and it's no fun having the old clap. And then I know that from my understanding and the women in my life that I've spoken with, that modern birth control has a lot of downsides.
100%. So many downsides. I mean, it changes your whole like body's system. The hormones in it is not good for you. At least for me, I don't like it.
So you are bullish on a stock that looks like it can alleviate real world problems that a huge consumer market has.
I know, it's crazy. It's not just an idea.
Yeah. So that's fantastic. I think that's a great reason to be bullish on a stock. The Trading Chick, everyone. Thank you so much for being with us.
Thanks for having me.
Our pleasure. All right. See ya.
Okay, bye.
All right, guys, that was the Trading Chick. Make sure you check her out on YouTube and on Twitter. As a reminder, as always, hit the like button on this video. And if you don't already have it, hit the little bell thing and the subscribe thing so you can get alerted every time we come on for Silly Goose Times. Big shout out to chat for, the ticker on the one we're looking at right now, Austin, is EVFM, Echo, Virginia, Frank, Moo, like a cow. All right. So at any rate, guys, we're out of time. It's 10:31, guys. Oh my God. I can't believe we went over on time. Next up, right after me, happening right now, is the Benzinga Pro Showcase. So you can learn how to use the best damn tool in stock market research to make money in the markets. I highly recommend tuning into that. Although it's weird that a bunch of people are still here because I thought we were supposed to automatically transfer to the next show. At any rate, I'll stick around for just a few minutes to get things wrapped up. And what I will say is that this has been Get Technical. I'm Neil Hamilton. Everything that we've spoken about today is not investment advice, but rather for educational and entertainment purposes only. I love hanging out with you guys. It makes my day. It's such a good way to start my morning. I gotta be honest with you. I love it. I love it. I love it. Let's get this video to as many likes as possible. If you get it to 800, I will buy a rat suit and humiliate myself in front of my colleagues to bring you joy. So producer AB, do we have to stop? What's the deal?
Yeah, for it to automatically redirect to Benzinga Pro Live, we have to end the stream. Unfortunately, I hate to do it.
That's okay. That's okay. Thank you again, everyone. We will see you at the same time, 9:30 a.m. Eastern tomorrow on Get Technical.